All right, thanks for joining me today on Discovering My Dividends. This is my channel with the series that I'm doing on stock of the day. Well, Canadian stock of the day. I'm a 1% investor, so I'm using my 1% strategy of compounding to try and reach $1 million as quickly as possible. Originally, I started for less than 7 years. Kind of a modest, and less than 5 as kind of a fast buy-in, starting with only $150. All right, so stock of the day. I've got 2 stocks that I went ahead and bought today because I felt like they were in the place that I want to be. And the first one is TELUS, T.to. Right now for the year, it's down. Let's check for the year. It's down. So it's kind of had this recent downswing, and it looks like it's maybe starting to think about turning that around. But, if I go back to the month, the week, it's kind of flat, but there is definitely some movement. So I feel like I can get my 1% gain out of it and go from there. Nice thing about TELUS is it is definitely a stock I feel like I could hold for a long term, and that dividend yield is 8%. So if I end up getting a dividend out of it, 8% a year, it's not as good as the compounding I get if I turn it over quickly, but nonetheless, it is decent, and I think a fairly secure buy if I end up holding it for a long term. Second stock, BCE. Now, BCE is taking a lot of hits in the last year, so let's go check out the year. You can see it was quite a bit higher, up around 37, is down to 32. And if I go back 2 years ago, it was 54. So it's kind of been taking its punches. They've done a few things to make it better, like they've lowered their dividend, which isn't always a positive for people that are holding it. But they lowered the dividend to increase their cash flow towards obviously debt, and then they sold off a couple things. Well, at least one. Which was, I believe, their soccer team. And I thought they sold one other thing. I can't think of what it is right now. So they got rid of that, and they've really kind of focused on some long-term growth again, so that they can kind of build. They do have a large customer base, and so long-term, I think they're going to be okay. Interest rates are also coming down, and they're probably somewhat protected from tariffs just because they're a Canadian telecom company. So probably okay there. I know they do have some cross-border stuff they do, but I don't know if it's as much about the tariffs affecting it as kind of the dollar. So if our dollar is dropping, they're probably bringing more cash back, which is, a good thing. With that being said, so BCE is kind of, if I look at it for the week, it's down, had a significant drop. Not huge, but just enough to kind of make me interested. And overall, this last little bit, I feel like it's kind of been building. And so with the recent drop, I feel like, it should turn around and get the 1%. It's in a good position for that. It's kind of a secure, safer stock I like. Now, I'm not an advisor, so none of this is advice. If you need advice, go see an advisor. Simply put, if you decide to go with any of these stocks that I have shared today, please do your due diligence and make sure they fit your portfolio. I know they fit mine based on what I'm doing, and I know what the risks are, so I go ahead with that. Now, I just want to kind of have a honorable mention. There's a stock that I always am following right now, which is EQB, and if you look at it, it kind of looks like at the very right here. I mean, it's down to $87, was up to 103 not too long ago, just in July, August. And it is a stock that has kind of been going down over the last year. We kind of look at it for 5 years. You can see it's had that downward trend from 2025. I feel like they are, gonna make some kind of a bounce back here, EQB. So it's definitely one that I should be jumping into again, and I probably should have done it today, but I just didn't. I felt these other two were better choices for getting that quick turnover. And EQB, because it's been kind of continually sliding, I feel like I kind of want to wait till it hits the bottom before I start playing that game. although I should be able to get my 1% even if it's still in kind of a bear mode. And that's it. That's it for stock of the day. Do check out my link for WealthSimple. They're easy to use, and I don't pay fees on any of the Canadian stocks and ETFs that I buy and sell, which is great for anybody who is starting with not very much money, or somebody who wants to keep their margins really tight. For instance, if I buy something for $10, I can sell it for $10.01 and make a profit. That is a fantastic thing for somebody who is doing kind of what I'm doing, or just even not starting with a lot of money, because trying to get that margin when you also have a huge fee, it's just it's almost impossible to trade. So I definitely recommend WealthSimple based on my experience with them, and no other reason. They're not paying me anything, so it's up to you to decide what's best for you. All right, see you to the next video, and thanks for joining me.